let's remember, they don't know anything about dental.
No.
They don't know how it works. They don't know how it functions. I mean, I can tell you that in one of the organizations I was a CFO in, every board meeting, I was re-educating the board about how dental works and why the great ideas they were showing up with could never work and why we would all get thrown in jail if we did what they said.
AI isn't just changing dentistry, it's completely redefining it. Tune into Bite-Sized Podcast, the Dental AI and Tech Podcast, and stay ahead of the curve.
Growing your dental organization is supposed to make it more profitable, but the data from the last 5 years suggests the opposite might be true. Ken Kaufman has sat in the CFO seat at some of the most consequential DSO growth stories in dentistry, including Community Dental Partners, where he helped scale the organization to 75 locations, and Nuvia, which is kind of blowing up. He also co-authored books on dental financial strategy, including the forthcoming title, Roll the Equity, coming out on September 1st, which is a direct examination of how private equity actually works in dentistry and what founders get wrong before a transaction. Ken now runs AccruDent, a financial advisory firm focused on helping DSOs between 5 and 25 locations build the kind of financial infrastructure that actually survives growth. Welcome to the show, Ken. Thanks for coming on.
Thank you, Adrian. I'm thrilled to be here with you.
Cool. It's great. I know nothing, absolutely nothing about finance. We both went to BYU for a little while, and I think you aced economics, and I barely scratched my way through economics once.
Hey, as long as we made it through, right?
Yeah. I did end up leaving BYU and graduating from the University of Utah, which I proudly talk about now. So I don't know where that puts us, but I'm a Utes fan.
That's a great school. There's so many great people there. No issue.
All right. Give the audience a quick blurb on how you landed in dental.
Yeah, of all the crazy things, and I've been here now for almost 25 years. So my first foray into dental was when in 2008-ish, 2009-ish, I started doing some fractional CFO work for various clients. And I actually landed with a guy this was in Las Vegas. He was renovating Winnebagos into operatories in Las Vegas. He was parking those Winnebagos next to the parking lots where the casino employees would park during the day. And then he would just be out there flagging them down and getting them in for recare appointments and doing all kinds of things like that. So that was my very first opportunity to see how dental works, albeit that's a little bit different
totally
than
did that end up going somewhere with that guy? Did he end up turning into something, or because I know dentists?
The biggest challenge was he had over levered himself, and so we ended up having to really like scale some things back before he could get into a growth mode again.
Yeah. Cool. That's interesting. So that was your first touch to dentistry. And then did that just naturally suck you in and you could never leave like the rest of us?
I would say it wasn't necessarily that. It was my wife really wanted to move to Utah from Las Vegas. Yeah. And when we came to Utah, pretty shortly after getting here, I got involved with a startup venture. And if you look up here, the Nomad that's right up here, the Nomad dental X-ray device. So I ended up being the president of that company, and then we sold it to Danaher Corporation. And then from there, I started. It wasn't too long after that I got involved with Community Dental Partners and took the CFO role there and helped grow that organization.
Nice. Have you just, I mean, like when I talk to people that have been in dental forever, I never knew, like if you'd have told me 25 years ago, I'd be working in the dental industry, I'd be like, what are you talking about? You crazy?
Same.
It's such a great industry. Like, I just love it. The people are cool. They're not weird. Well, there's probably a few weird ones, but almost everybody's super cool. They're doctors. They want to help, they pay their bills. So it's like, why would you want to go anywhere else?
Yeah, that's right.
Ever wanted to get out of it?
No, I've just been here the whole time. And in fact, when I decided that to move on from Nuvia, like it was a no brainer that I was going to do something in dental.
Yeah. Yeah. Nuvia is all over the place out here in Utah. Like they're just blowing up. Like how many locations do they have now? Like 40, 50?
Oh, that's a good question. When I was there, and this was a little while, this was back a while ago, I think we were close to like 40 locations and
Yeah.
pretty spread out around the US.
Yeah. Yeah. They're just blowing up. So anyway, I'm sure you were part of that growth. That's fantastic. Tell us about your book, Roll the Equity.
So my daughter and I wrote a book. We'd talked about this before, Adrian, but we'd wrote a book before, and we knew we had another one in us. And I knew that there are a lot of doctors out there that are super smart, but don't understand what private equity is, how it works, why you should or shouldn't consider selling, or everything that goes with it. And I've had the opportunity to be in venture-backed organizations, private equity-backed, founder-backed, like a lot of different equity structures. Yeah. And I just felt like I really wanted to put something out there that could help doctors specifically navigate through the situation of if they're going to sell, if they're going to go to private equity, if they're going to do whatever.
Yeah.
And so that was really the impetus of it. And my daughter's a phenomenal novelist. And so the first book she wrote in a very story-like way. Think of, Patrick Lencioni, the way that he writes books and does that. And so we just decided we wanted to do another one. And I feel like this book, once it gets out there in the hands of dentists, I think it's going to educate them and help them think much more clearly and much more concretely about how they should look at the value of what they've built and how they want to monetize it.
Yeah, so I haven't been really involved in, I do marketing, right? And so I'm just a marketing dude. But like this whole angle on what's happened over the last 5 or 6 years since rates were super low and all the money that's been dumped into the industry, it's crazy to see it's just wild to see what's happened.
Yeah.
I went to, you're going to Dykema next week. My business partner Seth's going to Dykema. I was at the ADSO event 3 or 4 weeks ago. It's a great event. And it's just really interesting to see the conversations that are happening at this DSO level, the very, very sincere concern about wanting to provide treatment to everyone, in rural communities, and that these DSO models are built for scaling and providing services where typical practices, a single practice owner may not want to go, may not want to build a practice in the middle of nowhere, So it's just really interesting to kind of like be starting to get involved in these conversations. So which is one of the reasons why I invited you on. I really wanted to understand this better and to kind of pick your brain on it. So here's where I want to start the conversation. One of the things that you said in a LinkedIn post, which is why I reached out to you, was that scaling doesn't necessarily produce value. And I don't even know if I said that correctly. But the idea was that
that's a fair way to characterize it. Very fair.
Okay. Scaling multiple locations doesn't actually produce the kind of value. It naturally, I think people think, oh yeah, more locations means more money, right? But you have a contrarian view of that. And I want to start there. Can you just describe that to the audience and help us understand why you would, hold off on that claim?
Yeah, for sure. So here's the way that I think about it and the way I see things working in the industry. You'll have a doctor that starts up their own practice, and then they think to themselves, okay, this is going good. I'm going to go to the second one. I'm going to go to the third one. And things get really, really complicated really fast. And the reason why I pitch it that way is because when you go from 1 to 2, that is inordinately difficult because you no longer are in the same place because there's a second dental practice and somebody's got to make sure that all works. And what about the systems and processes that we want it to be consistent across our platform, but you don't really have good systems and processes. Yeah. And so people are just kind of surviving and, your employees are surviving and making things up and figuring things out. And like, that's just 1 to 2. So you go to 3, you go to 10, you go to 20. It is very, very hard. And over time, what happens is you get bloat in the organizations as you're trying to grow. All of a sudden margins start to go down instead of stay level or increase, which is what your hope is when you're going to, bring a whole bunch of dental practices together. And I just think there's a little bit of a like rosy lens on what it really takes to do this. It is very hard. And it almost like dentistry ends up becoming like 5% of what has to happen.
Yeah.
All of the rest of it is
all management,
growth and the system and the process and all those different things. And when I say that, I'm not trying to say that doctors don't have autonomy or they can't treat the way they want to. That's obviously a core component of everything that happens in dentistry. But when you're going to scale these organizations, man, it is really hard. And a lot of times you end up break even or maybe even losing money if you're not really well capitalized and you're not really well designed to just be extremely efficient with operations.
I'm gonna draw a terrible analogy that I think is kind of funny. So I might cut this out if this does not land. But growing a DSO sounds a lot like having children.
Oh yeah,
totally. Fun, and it's like, okay, life's different. We can't go out to eat tonight unless we want to take the baby with us.
Mm-hmm.
But you get used to it. It's like, oh, I got this, I got this, right? Then you have 2 and it's like, whoa, man-to-man coverage, right? Okay, you got that one, I got this one, right? Right. And then when you go to
I've said this exact analogy, exactly the way you're saying it. This is beautiful.
If you go to 3, the shit hits the fan, it's over, and all of a sudden, stuff just becomes noise in the background that you eventually ignore. You know what I mean? It's like everybody's screaming and you don't even hear it. But after 3, it's just more noise.
So true. And my wife and I have 8 kids. And so
totally.
Scaling the family, scaling the DSO, whatever it is, right?
Okay. I don't know if my analogy lands, but it's probably kind of like that a little bit. I don't know.
It's fair. It's fair. And things just get so much harder. And when you get to where you have 3 kids, that's when I say somebody's always open. And that's a bad.
Yeah. All right. So you said bloat. Bloat was the word that you said that begins to cause the problem of less returns that you can't scale. So does the bloat happen in multiple areas? Is it just headcount? Is it executive leadership? Where does the bloat begin to happen?
It's everywhere. And when I say this, Adrian, this is way bigger than just dentistry.
Okay.
Bloat and these things that happen everywhere because like when you start your dental practice and you're getting it going, what's going to happen really quickly is you're going to think, okay, I want to buy this software and there's a vendor who told me about this other thing over here and I need to do my marketing and I need to do all these different things. And so there's a purchasing mentality that over time you end up with stuff that you don't need. And you over purchase, you overbuy, you over hire,
trying to solve problems, right?
Yeah. And you're trying to solve problems. Usually you're hiring the wrong kind of people. I mean, and I'm saying this from the perspective of, I have run many, many businesses and I know how to like sniff all this stuff out. For somebody who's a dentist and they're just starting their second location, it's going to be hard for them to sniff out
Yeah, where this
Hey, you have 4 different practice management softwares. You should totally make that way more efficient right now. Like, let's spend our money on making that more efficient into the future. And guess what? That's going to create profits. But instead, I like my 4 things. I don't want to get rid of them, and so on and so forth. So bloat can just happen in so many areas where you're spending and you think it's going to be good for the business, or you're crossing your fingers and hoping that it will, but it isn't.
Well, I'll tell you, if you're a small practice, you got 5 locations, 6 locations, and Ken jumps in there and is like, all right, man, we got to change our PMS. We got to get all on the same PMS. Everybody across the board is going to go, please fire this guy now.
Oh, yeah. My biggest shock when I got into dentistry was that revenue disappeared because we were doing acquisitions. And as we were bringing those acquisitions on, the revenue would disappear for 1 to 2 months. And it was because of the practice management software and getting all the information from the patients and getting everything organized and converted over if you're moving to a different system and so on and so forth. I was blown away, just by that. And you want to talk about bloat, like really quickly, that can create a massive problem in your organization.
I have an example of this that's related to marketing, and that's a perfect example of just one piece of where bloat can happen. So we've gone way heavy into AI, and that's not just developing software to sell to dentists. That's just like how we run our business, right? Like streamlining processes, automating what we can, et cetera, et cetera, et cetera.
Yes.
So I've had my head deep into this for a while. And we, a few years ago, we invested and helped launch a product called Annie AI, which is an AI receptionist. Now there's like 1,000 of these things, right? We were one of the first handful that kind of hit the market. And in order for that product to stay relevant long-term, it needs to be able to do more than just answer calls. It has to be able to schedule appointments. It has to be able to reschedule. It has to be able to send emails and texts. It has to be able to forward calls. It has to be able to read data in the PMS and write to it. Okay. You keep going. And now it needs to be, today, the AI receptionists, if they don't have that plus what I'm about to say, you're not going to be able to compete. Mm-hmm. So AI receptionists now need to be able to verify insurance and update insurance information, right? They need to be connected to a whisper technology where the doctor is speaking to the patient in the office and he's got a necklace on or a wristband or a phone, and that the note taking goes in and associates with the AI receptionist. I mean, like all this stuff is being developed, has been developed, and there's like all of these products right now. There's like 50 different AI little tools. And what's going to happen over the next 2 to maybe 3 years is there's going to be massive consolidation, because a doctor goes and they buy an AI receptionist. And in that AI receptionist, they have to pay for an API integration to Dentrix. Hey, I got a thumbs up. Look at that. They have to pay the Dentrix cost, the Henry Schein, to get the API integration. And then they go buy an AI note taker, and that company has to pay. Look, I got another thumbs up. Oh my gosh, I didn't even know I could do that.
We're at the fireworks now.
Hilarious. Sorry, audience, didn't know I could get sparkles. Anyway, so what happens is now a dentist has got like 8 different AI things, and they're all paying for API integrations 8 different times, which adds up to like $400, $500, $600 a month, right? So it's like you talk to a doctor and you're talking about bloat, and I'm like, dude, software right now is being developed so fast.
Oh yeah,
you could have 8 different systems be paying for the same integration cost 8 different times, but also some of those softwares probably all do the same thing. You know what I mean? It's like that's exactly just right. One area of like
the place where I see the problem with what you're talking about is it's that whoever is bringing the AI tool in doesn't understand dentistry.
That's definitely a problem.
And doesn't understand how it works. And so you end up like with just a total mess. And so they haven't invested in understanding the technology and the way it works inside dental, period.
Yeah. So bloat. Okay. So we've got bloat with like software, but we've got bloat with head count. What are some other areas of bloat?
You can see over time that the dental supplies themselves can start to become a bloat, because you start to think to yourself, well, I want to buy this one and it's 2 times more than what you had before, but somebody sold you on this great idea, but the reality is that you're going to get the same outcome either way. Or another place is with labs. If you're not tracking those really closely and tracking who your lab partner is, really quickly, they're going to start increasing their prices over time. And now all of a sudden you have all this bloat, which in this case, it's everything got more expensive. And I don't have I have no recourse to that. And so it's just bloat and things are just getting more and more costly.
How much of this gets really frustrating for the clinician? Because what you're doing is you're coming and you're saying, hey, we're going to standardize stuff. We're going with one PMS. We're going with this lab. You standardize all of it.
Yep.
And doesn't that just frustrate the hell out of the clinicians though?
Yeah. And it depends on the model, Adrian, because, there are some DSOs that allow the doctors to pick their own lab and use them and to pick their own supplies. But what I will say is that over time, that DSO, especially if you're getting ready to sell it or, move down that path, at some point, it's going to be very beneficial for you to standardize the labs and and the dental supplies and those kind of things.
I sat in on a presentation. I wish I remember the doctor's name, but it was a Straumann sponsored presentation, but this doctor was leading a 30, 40 location DSO. And this is all he talked about. He says, if you come in with us, this is the PMS. We use Straumann's products. And if you don't like it, then we don't want you. Because there was so much emphasis on alignment on everything. So they're dealing with the same problem. They're solving
the reason they're doing it is because they're trying to remove bloat. It is what it is.
That's just not something that a typical clinician probably even thinks about. I mean, they probably, the mind of the clinician probably better than I, but they probably come in like, I'm going to do great dentistry and that's what I'm going to focus on.
Yeah, absolutely. And I mean, there's the handful of dentists that really like put a lot of time and effort into trying to upskill their business savvy and, learning about business, learning about like the constraint theory and Kaizen and how to run lean and do those kinds of things. But not every dentist wants to do that. Some of them just want to work in their craft, which is fantastic. Wow. I don't have any, in fact, they're the heroes with the patients and, everything else, but it's a very real thing. And as soon as you want to standardize something, meaning you have more than one practice and you want everybody to be doing things the same way, again, it's just, there's a lot of effort and a lot of time. And I know so many doctors that have gone through this process, and it takes time, it takes money. And then ultimately, if you can get it right, there's a really, really nice opportunity at the end.
But it's not as golden as everybody thinks it is. It's like, if you just start acquiring locations, it doesn't mean you got this huge payout down the road. I mean, you can get your butt handed to you
really quickly. Yep.
Very quickly.
No question.
So let's zone in on the bloat related to headcount. As one issue, because I want to hear what you have to say, and I'm going to kind of compare that to my own company, which is not a dental practice, it's a marketing company, but I want to isolate some issues here. So you've described a pattern of growth where the growing triggers hiring consumes your margins, basically. How does that typically spiral? How does that start typically? Why is it that the organization ends up starting to hire the head count And what are those positions typically?
Yeah.
Can you answer that question?
Yeah. So the easiest way for me to do this is to describe it in sort of three buckets. The first bucket is everything that happens at the dental practice, taking care of patients. The second layer of this is your investments that you're trying to, like the money that you're spending because you want to try to grow. And then the third component is where you actually have a full DSO structure in place that has its own set of employees, like you could have a CEO there, or a director of operations, or your just any and all of that.
So we've got the team, the dental team in the practice. We've got companies like marketing companies like us to help people grow. These are like softwares and independent contractors, that kind of stuff.
Yes.
Labs. Okay. That, and then you've got your DSO organization.
Correct.
Okay. All right. Keep going.
And so whenever you're going to do anything inside the organization, you have to think about what the cost is going to be to make that next hire. And if it's a hire that's going to create a cost, they're not revenue generating, which our doctors and our hygienists are revenue generating. You get stuck really, really quickly because you say to yourself, okay, well, I'm going to hire some employees and I want to do this and I want to try to take on this initiative and I want to do a third location and all of these different things. All of it has massive. It's a massive hit on everything that's happening financially inside of your organization. And so what happens really quickly is if you do not have fiscal constraint, you can get yourself in trouble.
All that margin gets eaten up. Yeah.
Yep. Also, the ideal scenario is anytime you think about, here's a project or here's a thing that I want to go take on, and I think that this is going to increase the value, or I'm increasing the revenue that's going to come into my practice. Anytime you go through that process, you should actually put a project plan together and decide what it's going to cost and how much profit is going to be generated as a result of it. Just a simple little spreadsheet. You can throw some things on, and I'm a nerd about this stuff. We have models and all kinds of things coming out the wazoo in terms of how to help dental groups and dentists themselves make the right decisions financially as they're trying to grow or scale, or maybe even just sort of level things off for a while.
Well, this is maybe a kind of a shameless plug, or maybe a non-shameless plug, but this would be an argument for a fractional CFO or fractional executives rather than bringing people on, right? You bring them on for a period of time. They know that their job is only there for as long as they can provide value, but you bring somebody in as a CFO or a CEO and they're not generating any revenue. They're just talking about all the money that's going to be made in the sale. Mm-hmm. You just eat up. I can see how you eat up your margins. Are there a lot of DSOs that are leaning towards the fractional executive board rather than?
It's more prolific now than I've ever seen it. And it's not just the CFO seat. It's operations. It's clinical. You have sort of like a fractional clinical leader for doctors that need training and those kind of things, and need clinical support. And so, they're more than ever, I see that happening. Generally speaking, getting that fractional CFO in place is going to serve you really, really well, especially if you're going to go past one location.
This is really so. My social practice, we've been around for 17 years. All right, we've worked with over 7,000 dental practices. We got almost a couple, between 1,000 to 2,000 practices right now that we currently work with. Okay, nice. So we've got scale and whatnot, right? And I would say up until about 3 or 4 years ago, most of our clients were single practices, right? Mm-hmm. We've started working with several DSOs. And as I've kind of leaned into understanding this industry, right, and how it's run, I've been having conversations with marketing teams at these DSO organizations, and I'm seeing kind of like a fairly wide spectrum of capabilities. I mean, it's all over the place. Some of these marketing teams are band-aided together. Some of them don't even have any. Others think they've got something, but people that they've hired don't know what the hell they're doing. So I have been thinking that the way to, because what we have done in the past is we have basically just offered services, right?
Yeah.
It doesn't matter. DSO comes to us. Hey, we need to rank higher in Google. All right. Well, here it is, right? We need more reviews. Oh, here it is. We need to run our ads. Here you go. Yep. But what I'm seeing is that a lot of these organizations, because they either want to retain and build their own marketing team, or they already have a current team and they don't want to fire them, right?
Mm-hmm.
They want that the best way to approach the industry is in a fractional CMO role, right? So because I can't have any conversations if I'm talking to a marketing representative who's like, we're not going to hire you because if we hire you, I'm fired.
Exactly.
I'm out. Exactly. Right. And I can't talk to an executive because they're suspicious of all these crazy marketing companies out there. Right. So it's kind of like you have to approach the marketing team and say, let me support you. And in a fractional role. Right. Because like we have all the systems built, right? We've streamlined the whole damn thing 10 times over. Like nobody can scale like we scale. Right. So anyway, you bring up this fractional CFO idea, and I'm thinking to myself, I'm like, this is probably really the only way to approach the industry is like, don't buy our services. Let me just consult with you for a little while, and then maybe you'll want to work with us or something. I don't know. It's a really interesting game for sure.
Well, and if you think about it from a mindset perspective, when you hire a CMO on a fractional basis, you're getting the high level thinking that they have that will help you avoid the problems and solve those problems. And then you're going to bring in lower level people that can just execute on various, initiatives and things that, you guys put in place.
Yeah, totally. I mean, so when you get hired as a fractional CFO, or in the past are you still doing that now?
Yeah. I'm working with some of the larger DSOs in fractional roles, especially where it's like a new CFO. They're new to dental, and they kind of just need.
So you kind of come in and consult
with their arms around them. Yeah. I've also done some interim where, for a period of time there was the CFO seat was empty, and I just came in and kind of filled in for a month or two or three, to keep them going.
That was something you brought up in our prep call, which is that a lot of DSOs have empty CFO seats or have gotten rid, or there's turnover. There's a high turnover. What's happening with that?
Oh my gosh. It's a little disheartening. So the CFO role in general is a hard one. It's a grinding type of a role inside the organization.
Yeah.
And dentistry is really hard. And some of the DSOs out there right now are in financial trouble. Some of them are in receivership and things like that.
That means their receivership means they're going bankrupt, or
yeah. It usually means that
they need to restructure or something like that, or
they're not keeping up with one or more financial covenants that they've made with the bank or with whoever their lender is.
Is there a lot of this happening right now, or is it?
Yeah, there are quite a few assets that are in some stage of this. And in fact, I'll throw this out, Adrian. I've been hearing people talk about what's called the zombie DSO. And what's happening is you have groups that have or private equity, or somebody's come in and bought, and in the process they needed to pay out the doctors and the owners and those kind of things, and they over levered themselves in that process, and now they kind of are stuck in a place where they are generating just enough cash to kind of keep the business going, but not any excess cash to be able to grow and continue to go where they need to go. So
what do they do in that situation? Well, like, what do you do with a zombie DSO?
You're stuck, and you're going to do like, you have to start finding any way you can to generate as much cash as you possibly can so that you can start
get yourself out of it.
Yeah. And work yourself out of it. There have been several DSOs that have gone bankrupt over the years. And, having been in the industry now for 25 years, I've kind of seen and heard it all. But it's going to work itself out, and it will ultimately get right-sized. It's just going to take a while for that.
So you've been in the industry for 25 years. What's been the difference in this last kind of like since COVID, since the rates were almost zero? There was money flying everywhere a few years ago. Is this a unique situation? Have we seen more problems coming out of that as rates have gone back up than you have in the past, like back in like 2009?
Yeah. For example, those who had variable debt, when all of that happened, some of them couldn't service all their debt anymore.
Yeah.
Some of the bigger DSOs, they all of a sudden had an extra $1 billion of servicing debt to work their way through what they needed to work through. And so it's been difficult, and it's been hard, and what happened is private equity came in, started to get involved. Others started to get involved in purchasing, and they just over-levered themselves for a myriad of reasons. I could come up with many of them right now, but I don't want to bore the.
This is really interesting because in the marketing industry, the dental marketing industry, okay, in the last 2 to 2.5 years. I know a lot of these marketing companies and the executives and the CEOs and whatnot, having been in this industry for so long. I have seen maybe 8 to 12, so I could probably count them up, marketing companies that have been bought by venture-backed or PE companies or whatever.
Mm-hmm.
And I was talking to a guy from is on a buy side. He was a buy side. We've been hit up like every freaking week. No, every day I'm getting emails about this, right? But we were talking to somebody a few months ago, and this guy said, look, the P's they're a little bit scared of dentists right now buying up practices, and so but they like the industry. Yep. And so they're buying up organizations that are in the industry, supporting organizations. So I've seen a whole bunch of marketing companies get bought. Mm-hmm. So, which is kind of interesting, we have seen a slowdown in, I'm asking this question. We have seen a slowdown or have not seen a slowdown in practices being purchased by private.
There's definitely been a slowdown. And getting deals done has gotten much harder.
More scrutiny.
Yep. And if you go back to pre-COVID, dentistry, a dental practice had the lowest default rate of any business in the United States. And now all of a sudden, because you've got private equity and some of these things going on and over levering, it's kind of messed with that. And so part of the outside world looks at it and says, well,
I don't know about this.
Does it really have the lowest default rate now, today? Or if I were to peel back some of the bad decisions that were made by people that they were educated about it and their timing was just off, and with the way everything was flowing post-COVID. So there's a series of just challenges that are embedded in all that we could spend hours on if we wanted to.
Yeah, I'm sure. And I would probably, after about 2 hours in, start falling asleep. But I'm sure that you would be super pumped to continue talking about it.
Yeah, I'd be like, I just see your head hit the desk in front of you, and I'd be like, "Oh, cool, I'm gonna keep going."
All right. No, I'll just keep talking. He'll wake up at some point.
He'll wake up eventually.
So one of your positions, your claims, or a positioning that you have, and you named your company AccruDent. It's for accrual accounting model, correct? Okay. So, because I know nothing about accounting, and like I said, I tried not to take accounting classes and I barely got through economics. Describe accrual accounting process, what it means, and why this is a model that can save your butt, so to speak.
Yeah. So outside of dentistry, accrual accounting is the gold standard for running any business. And the reason why it is the gold standard is because what you're doing with all of the financial transactions that are flowing in and out of your business is you're getting them lined up so that the expenses that it takes to create whatever revenue occurring, that all gets put in the same period so that we can see exactly how profitable we are each period, or each month, so to speak.
Okay.
And in dentistry, it's kind of hard to do it.
Because you got like delayed billing and insurance and all that stuff.
There's a lot of different factors there. And when my son and I were talking about starting a business, we looked at it and we realized that like the dental industry has completely dismissed this tool that can be so powerful in the right hands to build and grow an organization. And so we said, let's figure it out. And so my son's got a lot of technology capability. And we've been building out models and building out reporting tools. And we now have done this over and over so much that we basically have done it for every PMS system on the planet Earth, so that we can come in and we can help anyone go through the process of converting from a cash basis accounting model to an accrual basis with their.
So it kind of retroactively pulls costs or pulls cash that you get in the future back to the time period. Is that you're just aligning all that? Is that basically what you're doing?
Yep, that's exactly right. So labs are a great example here. It's very rare that if a dentist orders a lab for a patient, it's very rare that in that same month that it was ordered, that it was paid for and put in the patient's mouth.
Got it.
As a final. And so that's kind of one of the best ways to think about all that activity is going on. And because everything about accrual accounting is what's actually really happening. It's not what cash is going in and out of your bank account. This is 100% about.
Would you get the same number if you just look at like averages over time? Would you kind of come up pretty close, or like what?
Totally. Yeah. Over time. Absolutely.
Okay.
It does work itself out, but I'm going to tell you that then what you're doing is it's like you've bought a Porsche and you're just keeping it in the garage.
That's what most people do when they buy a Porsche, isn't it?
Oh, I don't have a Porsche. I didn't know that. That's a good point.
Don't you just drive it like once every quarter when you got to go show up somewhere?
I don't know. So.
I don't either. I don't have a Porsche. But it's what this is like being able to see data profitability in the month that you're in, kind of thing. You're okay. All right.
And it informs you with the most accurate information so that when you look at it, you say, oh, now I know what I need to be changing and fixing in the future. If you're looking at your cash basis financial statements, it's just, you got stuff all over the place.
You don't see that.
No rhyme, no reason.
It's retroactively trying to make decisions for problems that we had 6 months ago.
Yeah. Well, and you could literally have a claim you've been waiting to have paid for months that shows up, and it's like, it doesn't belong in that month. It goes back. That needs to be coded back to wherever the revenue was generated.
All right. So let me ask the obvious question. Why the hell aren't DSOs doing this already? Do most of them not do this?
I ask myself that question multiple times a day. Number one is in dentistry with the PMS systems and all of those things. It's hard. It's not as easy as in other industries.
Got it.
The second piece of it is that everybody's kind of used to, because everybody's used to cash basis. And so the thought of thinking about and running my business based on what's actually happening versus cash going through the bank account, there's a reticence to like say, I don't want to. I'm afraid about accrual accounting. I'm afraid that I'm not going to understand it, or that I'm going to be seeing different things in my business. The third one that I want to just throw out there is for those who are thinking about selling the business, accrual accounting should be the number one thing that you start thinking about and doing right now. And the reason,
it's because if you're making more money this month, you want to get paid for it.
You do. You want to get paid for everything. Yeah, that's exactly right. And so, what we found is that when we help a DSO convert to accrual accounting, they get extra juice from from a sale price the longer that it's in place. Because think about it, if you're going to go buy some big DSO or small DSO, if you're going to go buy that, you care about, are these financials I'm looking at accurate? If they're giving you cash basis, they're not.
Right.
If they're giving you accrual, they are. And the longer that you've had accrual accounting in place in your business, the more value you get for it.
Well, what happens
over time, it matures and it proves itself.
Yeah, I would see if I'm a buyer of a DSO and I don't see accrual accounting, I'm going to discount.
Absolutely.
I'm going to discount the value of the company because of potential risk.
It happens all the time. And then when people do a QV, what happens there is they'll do the conversion in the quality of earnings process, but the private equity still is not going to give them much credit for it because it hasn't actually been running and live in the business.
Right. And if you can't prove it, they ain't going to give you $1.
That's exactly right.
You got a really strong argument.
So if you show up and say, oh, we've been on accrual for 5 years, they will pass over, they will purposefully step over other DSOs to get to that asset. Because they know that they're getting the real deal and they're getting the right information.
Yeah, I love it. That's great.
So that was kind of that's why we did it. I just said, like, the dental industry is crazy for not making this kind of a quasi requirement, so to speak.
You know, you said something else in our prep call that was really interesting, which is that buyers are usually looking for like a 5-year model. Sellers are just looking at their EBITDA. And I didn't really catch where the perspective is funky on that. Can you help me understand
for sure
disconnect?
So this is now getting into kind of the core of valuation in general. And so in today's world, we can talk about Elon Musk's big, his big market event that he just had.
SpaceX, when they bought Cursor for 60 million or billion or some ridiculous number. Yeah.
Crazy. So what is happening here is a DSO owner is having a private equity or somebody come in and say, all right, I want to buy you and I'm going to pay you X. I'm going to look at your EBITDA and I'm going to pay you a multiple of your EBITDA. Well, do you really think that private equity is that unsophisticated that they would just kind of do some round numbers and throw it together? No. What happens, and this is how the stock market works, and this is how it works in our businesses as well. The way that somebody from the outside is going to value is they're going to look at they're going to want to see a 5-year model. And the 5-year model means that you are going to show them, hey, if I stayed here and if I just run the business the way I've been running it, here's what's going to happen in the next 5 years. And so investors like to model all that stuff out so they can see, do I like this or do I not like it? And in this process, when you do this modeling and you take it all the way out 5 years, what the private equity people do and smart just finance people in general, what they do then is they use a discounted cash flow model to pull that back into today's date to say, here's what the stock is today, based on our projection and all the assumptions and everything we've plugged into what we think is going to happen over the next 5 years.
Okay. Gotcha.
And if you're going to go to market and you're not building your own model, today.
Then
Because guess what? As soon as the private equity engages with you, they're going to start building their version
they're
of it.
build their version of it.
But you might as well get into that discussion. And
Right.
honestly, the best transactions that I've seen and that I've been through have been where it's like we're helping each other through the process because
Right.
they want to get it right, we want to get it right, and so on and so forth.
Well, you got to create your story.
Yeah.
Or they're going to create the story for you, and their story is never going to be as sexy as your story, ever.
Absolutely not. And if you're going to go through a process and you're being told you're going to get paid this much percentage of your EBITDA as this and that, at the end of the day, you want to just be asking them, okay, can I see your model? I want to see the model that you put together for this. Yeah. But again, I am a proponent for, if you're a DSO, you should be building your own model right now today and updating it on a quarterly basis and be thinking about and talking about how are we going to drive enterprise value up and not have bloat.
Yeah, I got you. That's great. Okay, good. I think a lot of dentists probably, whether they're, I speak of independent practices, which is a little outside of our conversation, but I think a lot of dentists get right down to the end and they're like, I think I'm going to sell now in next year or within the next year. And they should have been prepping for that 5 years ago,
Absolutely.
At least.
There are so many great things that aren't going to cost you very much that'll put you in a much better position over time. And again, you're showing up as the operator and they're going to be like, hey, we like you. You're smart. You make good decisions here over and over. We see you making really good decisions.
What are some of those things? So let's say that somebody, it doesn't matter. I guess a DSO, it's a small group. It's an independent practice. If they want to be selling in the next 3 or 5 years, what are like 2 or 3 things that they should be doing today that they're usually not doing from your experience?
Yeah. So if somebody's going to buy your business, you think about this. You're going to get the best value if it's clean, if the processes are fully documented, the SOPs are documented, anybody could step in and run it. So if the founder dies, then somebody could, still take it and run with it and not miss a beat, so to speak, in terms of the business and its profitability and its cash flow and success. Like that's the number one thing, is systemize everything so that anybody could come in and then the buyer is going to come in. They're going to be excited about that. That's a great asset, because if they wanted to come in and fire everybody and just run the process, take it over, they could. They won't do that. Like, all that great knowledge is just going to go out the door. Otherwise they wouldn't want to do that. But they could if they wanted. And they like being in control. They like knowing that they get to make the decisions and so on and so forth. And so the number one thing is you need to be thinking about and building everything to scale at the same pace that everything else inside your business is scaling, so that it doesn't come in and look and say, oh, well, geez, these guys on finance, they're really great, but man, their operations are horrible. They need to come in and they need to see a really nice, clean package. And it needs to be like almost like on the silver platter. Here you go. Here's our business. Yeah. Let us know if you're interested, kind of a thing. Yeah. Versus the reverse of that is chasing, and just not ever being able to even speak the right language to get somebody to pay attention. So that's one thing. The second thing is understanding how private equity actually works, so that you know how to play the game. And this is what my daughter's book and I what our book is about primarily. But you want to clearly understand what it is that private equity does. Most people think, oh, well, private equity just comes in and buys dental practices. No, it doesn't. Private equity, their number one activity is to go find limited partners who have money to invest.
They're just going to roll it. You're
and
buy and sell.
those people and the private equity builds relationships with investors and things. And so they're raising money so that they can turn around and they can buy great businesses, which dentistry, some of them there are some great businesses to buy. And they're well run and they're well organized. But knowing and understanding that private equity is not the dentist customer.
Right. I get it. A dentist is probably going to think, oh, this private equity company really wants to provide great healthcare to the world. That may be part of their model.
They can't.
Really, they just want to buy something, turn around and sell it.
Yeah.
That's it.
And, the private equity generally, like private offices or family offices will sometimes stretch this out, but 3 to 5 years is generally the hold time that they want on an asset they invest in. And they want to be able to get a, 2 to 5x return on what they've put in. Yeah. And so just understanding what private equity is, how they function, how they work,
helps you understand how to align your company with
it that will help you dramatically. And the other thing too is let's remember, they don't know anything about dental.
No.
They don't know how it works, they don't know how it functions. I mean, I can tell you that in one of the organizations I was a CFO in, every board meeting, I was re-educating the board about how dental works and why the great ideas they were showing up with could never work and why we would all get thrown in jail if we did what they said. It's mind-blowing. And they don't know much about our industry. They know a lot about raising money, working with other capital investors, investing that capital. And the whole thesis of this, Adrian, is you have a so the whole premise behind it is the private equity. Oh, sorry, I just lost my train of thought. I don't know why, but the whole premise. Shoot, what was I going to say? The whole premise behind the private equity is they are thinking that they can make their investments outside of the stock market. They're like, hey, we've got money invested in the stock market. Got it. What we want to do now is we want to go find better returns. And so we're going to go find some of the best run companies in America or in Stockholm or wherever you want to say, but we're going to go and we're going to look for the diamonds in the rough that with our capital and a little bit of guidance from us, we can help them really kind of grow their organization. So it's an alternative investment source. That's really what private equity is. It's alternative equity.
Yeah. Otherwise they just put the money in the market and say, I'm good.
Yeah. Yeah. Put it in your VOO or, whatever your ETF is. Yep.
Yeah. Yeah. Okay, cool. So you basically, the first thing is systematize your organization so that it's on a platter and somebody can run it and plug and play.
Yep.
And the next one is just understanding how private equity works and what their motivation is, what their goals are. That helps align with, this is the type of organization that I need to be in order to be attractable.
That's right.
Attractable. There's no words I would call it attractive. Attractive.
If you decide you don't want to go the private equity way, then and you're going to go and partner up with another DSO or those kind of things.
Yeah,
it's the same concept either way.
Yeah. Cool. All right, so your book's coming out on September 1st. I'm going to put a link in the description to be on the wait list, and then also your first book. What was the name of your first book?
Financial Secrets to Grow Dental Organizations.
Okay, we're going to put a link to that in the description as well. And then I would imagine that you, because you're offering, fractional CFO opportunities, reach out to Ken via LinkedIn. Is that the best way to reach you? LinkedIn?
Yeah, absolutely. If you're interested in learning about accrual accounting, we can talk you through that. We can help you through the process if you want to do it. And then we have a whole bunch of other playbooks that we use to help dental organizations wherever they're at to get to the next level.
I think you're a great resource. And what's funny is it's like you said something that I've been trying to verbalize, which is I keep talking to these marketing companies at DSOs, and frankly, they don't know what the hell they're doing. They don't. The executives have hired a marketing team or have a marketing team, And I rarely run into somebody that knows what they're doing. And it's like, oh, you get brought in, when you mentioned you being brought in to train and kind of bring up a CFO to understand the industry and to recognize, like, that makes so much sense to me in terms of a marketing consultation type thing, right?
Yeah,
Where
that's right.
I could go to a team and go, okay, you need to do these things this way rather than the way you're doing, or you didn't even know you should be doing this, or you know what I mean? It's like, makes so much sense to approach the industry from like a kind of like a, a fractional CMO position. So
yeah, that's well said.
I get the value. I get the value of what you're providing. So thank you for coming on. It was awesome. You're great. Fantastic.
I really enjoyed it. Thanks for having me.
Thanks for listening to Bite Size Podcast. Tune in to stay up to date with everything dental AI and tech